Hello and welcome back to our series on the US and French tax systems. In this episode, we're zooming in on personal income tax and why the process can feel very different depending on where you file. If you're used to the French system, the American tax season might come as a shock. Let's walk through the key differences. Let's start with France. For most employees, the system is relatively simple.
Thanks to prélèvement à la source,
or source withholding. Your employer automatically deducts income tax from your salary and sends it to the government. That means you don't have to calculate anything yourself. Most of the time, your annual return is pre-filled by the tax office. All you need to do is review it and make any corrections if your situation has changed, like getting married, moving, or receiving new income. Now, let's look at the United States. Just like in France, filing a tax return is still required, even if taxes are withheld from your paycheck. But in the US, it doesn't stop at the federal level. In many cases, you'll also need to file with your state, and sometimes even your city or local tax authority. There's also no pre-filled return. You're responsible for reporting your income, calculating what you owe, and claiming any deductions or credits. To file your return, you need to gather all of your income records, not just salary, but also freelance work, interest from your bank, investment gains, rental income, even some gifts, or foreign earnings. It's a comprehensive look at your full financial picture. In France, it's similar, but often simpler. Side jobs are less common, and many savings accounts don't trigger income tax the way they do in the US, which means fewer forms to collect and fewer surprises come filing season. The good news? Most people use online tax software or a tax advisor to get it done. These types of resources can import your income data automatically, walk you through questions about deductions and credits, and help you avoid errors by selecting the right forms. Still, you're on the hook for the accuracy of everything you file. Another big difference between the two tax systems? Deductions and tax credits. In France, many of them are applied automatically or managed by the administration. In the US, you have to actively claim them, or you miss out. Common U.S. deductions and tax credits include mortgage interest, charitable donations, student loan interest, medical expenses, and credits for things like education or dependent care. Let's recap. In France, taxes are withheld from your paycheck. Annual returns are pre-filled for most individuals. Minimal effort is needed unless your situation changes. In the U.S., taxes are withheld, but you must still file a full tax return. You're responsible for reporting all income and claiming deductions. The process can be complex and varies by state. Thanks for watching. In the next episode, we'll shift from individual to business and explore how corporate taxes work in both countries.